Well, good afternoon. Thank you for joining us for our From Renter to Homeowner webinar. I'm Corby Gage, the Executive Director of Coastal Housing Partnership. And with us today is also Kim Pascage, the Program Manager for Coastal Housing Partnership. And we're delighted to have with us today two local real estate professionals to share their expertise with us. First is Simi Iordanides from Village Properties and Christian Menard from Guaranteed Rate. So thank you, Simi and Christian, for joining with us. Both Simi and Christian are part of Coastal Housing Partnerships network. And what that means is that as part of that network, these real estate professionals make it easier for you to become a homeowner by reducing the closing costs for employees of companies that are part of Coastal Housing Partnership. We'll be recording today's webinar, so we can send you the link to that recording. And the format for today's webinar is that I'll be asking the panelists some questions about the process of going from renter to homeowner. And then the remainder of our time together will be for you to get your questions answered. So we're in a webinar format, which means that your cameras are off and your microphones are off. So if you have questions, we hope you do, we'll schedule time for that. Please put them in the Q&A, and you can ask your questions at any time that you like. Don't think you have to wait till the end. If the question comes up for you, just go ahead and pop that in the Q&A, and you can ask it anonymously if you like. There's an option to do that. And Kim will be fielding these questions, and then we will be asking those questions of Simi and Christian at the end of our hour together. So before we hear from Simi and Christian, I wanted to remind you of one of the benefits that you have since your employer is a member of Coastal Housing Partnership. We partner with local real estate professionals who provide you with savings when you're purchasing a home, whether you're a first-time home buyer or not. And these professionals include real estate agents, lenders, home inspection firms, and a moving company, and some residential developers. So in general, having these real estate professionals as part of your home buying team means you can usually save 50% or more on your closing costs. So this is a great opportunity for you to work with some great local professionals and save money on your closing costs, which can be a significant chunk in addition to your down payment. So it's great if you can save that money there. You can find out the list of our network partners on our website, which is coastalhousing.org. And as I mentioned, both Simi and Christian are part of this network, so they would also offer you savings on the cost of their services. So please take advantage of that. So let's get started. As I mentioned, the objective for our webinar today is to provide you with guidance on making that leap from being a renter to being a homeowner. And we want to congratulate you on taking the most important part of that step, which is education. I think education often is one of the biggest hurdles to becoming a homeowner. You know, where do you start? What do you do? There seems like there's conflicting information out there, and we want to just give you the straight information and give you the tools, the resources, and the information to become a homeowner if that's something that makes sense for you. So, panelists, would you please introduce yourselves? We'll start with you, Simi.
Okay, thank you, Corby. We're so excited to join everybody today. I have been a realtor with Village Properties. I'm coming up on my 11th year, and it truly has flown by, and I so enjoyed helping hundreds of clients buy homes, whether it's a condo, multi-million-dollar property. And I do serve the areas South Ventura and Ojai, north to the Valley, Lompoc even, and Santa Ynez Valley, primarily CARP to Santa Barbara. Looking forward to another, who knows, 10 plus years here at Village helping other clients. It really is such a rewarding profession. And of course, Christian and I would love to toot our own horns, but we won't on this format, other than to say that when I secure testimonials from clients, it's wonderful to see the common denominators, which are Simi's great, she's helped us, and then fill in the blank. You know, it's the knowledge, it's the patience, it's the expertise, it's the staying calm in the face of whatever can go wrong will go wrong. So again, we're so excited that you're here. And as Corby mentioned, education is key. The savvier you become, the more knowledgeable you are as a potential buyer. And that's a great place to be. So thanks again.
Thank you, Simi. And I think you'll find that with both Simi and Christian, that education is really important to them, that you feel like you have that knowledge so that you can be the most informed home buyer possible. So I think that's important when you're looking for members of your home buying team to have someone who really wants you to understand the process and to know what you're getting into. So Christian, would you please introduce yourself?
Yeah, sure. So hi, I'm Christian Menard. I've been in Santa Barbara since college here. My wife and I met while we were sophomores and decided to stay here, lived here ever since. We have 2 children, and I like to volunteer and support local nonprofits like the Sansom Diabetes Research Institute, United Boys and Girls Club. And we're active and involved members of the community in ways that we can be. I've been doing this for, I think I'm coming up on 8 years. And, when it comes to first-time homebuyers, there's a lot of information out there. It can feel overwhelming. There's just tons of programs. I work for a company called Guaranteed Rate, very large mortgage company. We have pretty much all of them, including all the local programs too. But yeah, just to touch on what Corby was saying, something that I really enjoy doing is being that shoulder to lean on during the buying process and answering questions, ad nauseum if needed, and going through the process with the borrower to make sure that they feel educated, make sure that they feel like they understand everything. I think that's really important. So anyways, yeah, that's a little bit about me.
Great, thanks, Christian. And you raised the point that I think is so important, is there is no question that is not appropriate to ask. There is no question that it seems too simple or, oh, I should have known the answer to that. If you have the question, you ask that of your home buying team, and they are happy to answer that. I mean, they really want you to be knowledgeable and to feel like, you are understanding that process. So please never feel like, oh, this is a stupid question, or I should know the answer to this. There's no reason that you should know the answer to this. This is buying a home is just not something people do that frequently. And so even for someone who's not a first-time home buyer, these are questions that are important for you to ask. So please always feel free to ask any questions. So the question that we get asked most frequently, I have to say, is now a good time to buy a home? So let's just start right off with that one. And Christian, with current housing prices and current interest rates, should someone wait to buy, or is this a good time to buy?
Yeah, that's a good question. It's definitely the most asked question I feel like I get. And the reality is it a right time to buy for you and your family? When it comes to your direct finances, you're the one that's going to know what your budgets are and your expenses and the bills you have and how much you have saved up. I think a lot of people come across my desk and they're looking to get pre-approved. They want to get a sense of what their buying power is and what their expenses are going to be. And as a mortgage lender, we look at the principal interest, the property taxes, the homeowner's insurance, the HOA dues, and we factor that into the qualifying metrics to determine what your maximum buying power is. And oftentimes people find that they can qualify for a higher purchase price than they really want to be spending each month. So, I know that my team and I, we really advocate for responsible home ownership. We don't want people living in Santa Barbara and stressing as they're putting their head on the pillow at night because they want to go downtown and have a meal without having to worry about it. So there's a lot of people that are house rich and cash poor. And while it may take that to stretch to be able to buy your first property, you don't necessarily always have to do that. I think that the market right now, it's far different than it was prior to COVID. And I think that anytime people are like trying to identify the most ideal time to buy, it's like looking back in the past and trying to figure out when was the most ideal time to buy Apple or Google. You're never going to be able to do that. It may be that we're going to end up waiting for an extended period of time before the market comes significantly down like it did in 2008, or rates come significantly down again. So I think when you're looking at when is the right time to buy it, you're looking at, can I afford this payment? Does it make sense? Does it get me the amenities that I want and need in the property? And if you're comfortable with those two things, I think it's always smart to get into the market as opposed to renting. It's always going to be a little bit more expensive than renting, but there are tax benefits. There are lots of other benefits I'm sure we'll talk about later on to owning a home. But if you look at maybe the last 30 years of home prices, it's only been, I think, around 6 or so instances where the market actually came down. Most of the time, the market's kind of advancing onwards and upwards. So I think it's always a good time to buy. The silver lining right now is that you're not having to go against 10, 15 people on an offer on a really competitive house. There are some where we'll see that, even still now, where it's kind of a perfect storm of property desirability across a lot of different buyer markets. But right now, you may be able to negotiate the purchase price where you couldn't do that years ago. Yes, interest rates are a little bit higher, but if you get in now, you're not having to overpay for the property. You can often negotiate on things like credits, et cetera, and then you can refinance later on. And there's a good comparison that I did the other day where showing a purchase price of $700,000 versus $800,000, with the 700,000 being at higher rates, and then the purchase price jumping up a lot. Even with the lower rate, the payment is often the same. And then somebody who's refinanced bought at 700 with the higher rate, and now they refinance where the lower rates are, they're actually better off in the long run. So there's pros and cons to every market. Right now, I think this market is actually pretty good. There are some really good things happening that were not happening years ago. So
Great, thanks, Christian.
Yeah.
Simi, sorry. Do you have anything to add to that? What's your take on whether now is a good time to buy?
Sure. I think if you ask any realtor, realtors are going to say every day is a good day to jump into the market. I mean, we do have clients that are concerned that the market's going to bust. We have no historical data that supports that argument. So we always say yes. Why? We can look back at properties that sold in the prior 6 months. That's usually as far back as we'll go. And we even are amazed at how much properties were selling for back then versus today. So again, depending on the buyer's objective, if it is to build up equity and put a roof over your head, et cetera, we're going to talk about all of the advantages. Absolutely. Best to try to get your foot in the door sooner rather than later. Appreciation and equity are key for new buyers.
Okay, great. So it sounds like it's not so much market timing as is this a time that makes sense for you? And it's your home. So, you don't look at it as a straight investment. If it has appreciation, great. But this is someplace that you need to live, and you really want to look at it through that lens. So thank you. That's great information to have. Well, Simi, let's stay with you a bit here, and let's talk about some of the benefits of home ownership. What are some of the advantages of home ownership? Why is that something that someone might want to get into?
Yes, I've summarized what I call the top 6. There are many, many more, but just for the purpose of this presentation and to keep it concise, starting with appreciation. As I mentioned, in the past few years, our local Santa Barbara market has been on fire, if you will. And I'm going to just pull out something. I'm a very visual learner. So you see, I'm very big on stats, and this may help you. For example, going back to 2018 and 19, the median sales price was $1,220,000. These are single family homes. It increased by 5.4% that year. The following year, the market increased 20.5%. So when you're thinking about where can you park your monies, 20.5%. You couldn't get that at the bank. The following year, we're in 2021. The prices increased again. Median sales price went up 22.6%. And if you recall what was happening in the world at the time, COVID hit. Who could have anticipated that? So there were a lot of people with extra funds, a lot of people that needed extra elbow room, a lot of people working remotely. So there was definitely a marked increase in the change and a shift in what people needed to live in. The following year, a 13% increase in the median sales price. It wasn't until this past year, 2022 to 2023, where the market started to simmer down. It was, oh my goodness, the days of realtors writing offers for their buyers at the buyer's bequest was, I need this house and I need it yesterday. So to Christian's point, yes, realtors were writing offers $100, $200, $300, $400,000 over the ask price. It was a crazy time for real estate and very competitive. And if you're up against 19 other offers, how does your offer stand out? So this past year, the market, as I said, simmered down. The price went down negligibly, 2 points. And what I want to point out is this year, just January, we just closed out in January. So January 2024 over January last year, 2023, the median sales price has gone up. I know we're not interactive. Guess how much? 36.1%. That's a phenomenal number, right? It's a fabulous return. Now, we don't have crystal balls. I'm not going to say, sure, this year we're going to see 36% across the board for the next 11 months. But it is interesting that it bodes well for the market rebounding this year. Okay, so that's appreciation. And for a buyer to understand, trends come and go. But again, over the past 5-6 years, I've just illustrated that the pricing has continued to increase. It bodes well for buyers entering the market. Secondly, equity. Equity, again, is a huge benefit. It's the difference between how much a home is worth and how much is owed on it. The realtor's goal is always to help their clients, buyers in particular, become wealthy. Purchasing a home is one of the true surefire means to accomplish that goal. And it will be interesting once you enter this process to appreciate, rather than having a tenant spend $3,000-$4,000 a month every month and not see anything in return for it, and ultimately helping who amass wealth? Their landlord. So realtors and lenders are always trying to help those buyers benefit themselves. Thirdly, tax benefits. As Christian mentioned, there are 3 that you can itemize these deductions on your tax return. The interest you pay on the mortgage, which you would not receive if you're renting, your property taxes, again, and then some of the costs of purchasing a home. So that's our 3rd benefit. 4th benefit, savings. It truly is like having a piggy bank where you're depositing monies into an account. Basically, it is your mortgage that is going to help you over the long haul realize that you're building up equity. So rather, again, than just spending those thousands of dollars every month, you're building up your little piggy bank. 5th on the list, 4th, savings. So that was number 4. Predictability is number 5. We all know as tenants really do serve at the mercy of their landlord. There are some great landlords in town, and there are some that are not. So as a tenant, you never know when you're going to get that phone call, that email from the landlord saying, guess what, Joey, this year your rent's going to increase, fill in the blank, 5%, 10%. And depending on the type of property you're living in, that can vary. So again, being in a home, at least you've got the stability of understanding that your mortgage payment will remain static for, perhaps it's a 30-year loan that your lender puts you into, but it's that same 4,000, 3,000, whatever that amount is, that's going to be, again, a standard. It's not going to be this unknown throughout the course of the next few years. Finally, I always like to talk about freedom. Right? What is everybody achieving? They want the American dream. They want that cute little house, just like in this diagram here. You want your cute little house with a white picket fence, your backyard grass for your children, for the dog. And so the partners that you will be working with, your realtor and your lender, are going to help you achieve that. You will have the latitude to change the color of the paint. Something as basic as change the color of the paint on the inside of your house, the outside of your house. When you'd like, you're not going to lose sleep over, oh my goodness, the landlord won't allow me to put one more hole in the wall. It is your home. You have so much more freedom. And again, being a tenant, sorry about that, folks, being a tenant limits you on how much you can do, and you certainly need their approval before you proceed with things. So those 6, if you keep those 6 benefits in mind as you're starting on your journey, it will help you appreciate the difference between being a homeowner and being a tenant.
Great. Thank you, Simi. So before we go on to our next topic, Christian, anything that you have to add to that, or should we just go on?
No, that was really comprehensive. Yeah.
Okay, great. So, Simi, what would you say is the first step in moving from renter to homeowner?
I'd say that the first step in moving from a renter to an owner is finding that realtor. And it's that person that you're going to be most comfortable with on your journey, because you may be spending weeks, you may be spending months, you may spend years with this person. So it's really going to be important that they are responsive. If you're working, does the realtor work on the weekends? Do they respond to phone calls in the evenings? It's so key, because as Christian mentioned, there will be many, many questions that come into your mind. And if you're losing sleep, you feel comfortable knowing I can call a realtor, he or she's going to pick up and put my mind at ease.
Yeah. So we'll get into a lot of detail about kind of what to look for with in an agent and how to work with an agent in a bit. But as a real estate agent, are you pretty much hoping that someone has come to you with a pre-approval from a lender already, that someone has contacted a lender?
Definitely. So
okay.
if a buyer approaches a realtor and says, I've already engaged a lender and I have a pre-approval letter, perfect. The realtor is going to hope and pray that it's from a local lender. Why do we say that? When an offer is submitted, that seller wants to know that the local lender has some skin in the game, that they will in turn be responsive to the realtor, responsive to them. They will answer phone calls. They will respond to emails, because that team has to be in such tight communication as soon as you're ready to be writing an offer.
Okay, great. So Christian, that brings that to you. So obviously the real estate agent wants to see a pre-approval from a local lender in terms of, just knowing what they should help a potential home buyer shop for. But what are some of the reasons why you need to meet with the lender sooner rather than later?
Okay, let me answer that question second. I just wanted to throw out there too, there is a skill gap between online lenders, loan officers that work at banks, and actual dedicated mortgage lenders, local lenders. And that's why Simi was saying, I hope and pray it's from a local lender. Because oftentimes these larger, they're essentially like phone banks. You'll apply online and you'll get someone, and their job is not to spend an afternoon doing a deep dive on your finances and truly figuring out what programs are best for you, what you qualify for. Their job is to get 40 applications completed that day, because they have, turnover ratios, and they know that, oh, out of those 40, I'll have 5 actually get an offer, and I'll have 2 go through, and they have metrics to hit, etc. It's not the same thing as a dedicated local expert. And the other skin in the game is, I have a reputation to uphold here in town. The level of quality of work and communication is going to be significantly better than all those other people. So that's what she means. She knows that if the pre-approval letter is from a great local lender, you just make sure they have lots of good reviews online. You know that the chances of this escrow falling through are significantly lower than elsewhere. Okay, and then I would say the same thing for agents too. You don't want to work with agents who do 1 or 2 transactions a year, who they have their license and they don't, it's not their full-time job. There's a lot of knowledge and expertise that comes with being on a team and being a local professional that does, 8, 10 plus transactions a year. Really, you want to make sure that you're aligned with, high producing people. Anyway, okay, so the question was, what are some of the reasons to meet with a local lender? You, at the beginning of the process, may find that you're ready to go, and you're pre-qualified for a certain price, and your qualifying is really simple, and you can get out there and start looking at properties and submitting offers. A lot of times, though, you may find that you didn't know that you had a medical collection on your credit report that is just being an absolute ball and chain to your score and crushing your buying power or significantly limiting your options. So making sure that you review things with a local lender first to identify any issues first, to get them cleared up. Give yourself a couple months, even 3 to 6 months, to make sure that you're good to go. And if not, you have the time to make those adjustments, to pay off certain debts, to do the things you need to do to qualify, or at least get your credit in shape so you can get a better rate on your mortgage and save a lot of money over the years. I've had lots of situations where something will come up on credit, the person wasn't even aware. By the way, you can run your credit for free every year with annualcreditreport.com. That's a government sponsored poll. You don't get to see your scores, but you get to see every debt that's on there, so you can find out if something was sent to a wrong address long ago and it's hurting you, or it's in collections or something. And then just generally speaking too, you'll find that there are little things that we can do, little changes that we can make that can help. But it's really helpful to just be proactive. You're not gonna shoot yourself in the foot by being proactive. You're always gonna put yourself into a better position. So, getting those things out of the way first can help you be ready to buy sooner than later. It's worse for you to wait to the last minute to get pre-approved after you've sent Simi out and you've gone out to look at lots of properties, only to find out you don't qualify because of some technicality or some issue, and now you've got to wait, and all that time was wasted. So you don't want to be spinning your wheels. It's critically important for you to meet with a lender first. You've got to know your numbers and whether or not you're truly ready.
So when you go to meet with the lender, you're asking for a pre-approval. What's involved in that pre-approval process?
Simi, did you have something?
Yes, I was just going to add that a realtor may or may not want to show you a handful of properties, 1 or 2 or 3, just to whet your appetite, to introduce you to what's involved. But you're right, they will not continue to show that buyer properties ad nauseum if they've not gotten pre-approved with the lender, because it is wasting everybody's time. There's nothing more disheartening than that buyer saying, okay, realtor, this is the house I want. And if they've not been pre-approved, they would just really are so crushed by that. So once they start appreciating how fluid the market is, it will help be the impetus to engage the lender and work on that, because the realtors will always say that is a process that can take 24 hours. It can take a couple of weeks. It could take longer, but the lender is the one that is at the starting gate and ensuring that the buyer is in fact qualified to purchase a house. So like I say, it may just take 1 or 2 houses to see, but yeah, most realtors are not going to be taking people around unless they're qualified.
All
So
right.
Christian, back to you then. What's that mean for that pre-approval process?
Yeah, so very briefly, there's 3 tiers of pre-approval. There's a pre-qualification where you just take a phone call from the person, they share their verbal information about their income, assets, and maybe their credit. Oh, I earned this, and this is my bonus, and this is how much I've saved in my checking, savings, investment, retirement. I think my credit's great. I only have, this student loan, this car payment, etc. You can do some kind of back of the napkin math on that and say, well, I think you might be pre-qualified for 700 or 800 or whatever it is. But a pre-approval is the real deal. So you're going to submit an online application and you're going to upload your financial documents. So typically for someone who's employed, which may be many of you, as we're doing the Coastal Housing Partnership, not self-employed. So employed is last 2 years W-2s, latest 30 days of pay stubs, and latest bank statements. So all of them, checking, savings, investment, retirement. A lender is making sure that you have enough money to pay for the down payment, make sure you can pay all the closing costs, and meet any reserve requirements from the lender. The reserve requirement is, maybe 6 months worth of mortgage payments or 12 months worth of mortgage payments. Most of the time it's 0. Okay, but when you get into jumbo territory, that may be involved. Additionally, if you earn bonus or commission, I will typically want to see the year-end pay stubs for the last 2 years, because lenders calculate your qualifying income based off of the prior 2 years average, not looking forward. It's looking backwards. So somebody who's W-2'd maybe gets a bonus, and they also earn a little bit of commission. In order for me to include that bonus and commission, I've got to show a 1 to 2 year history of receipt and calculate a prior average on that to add that to the qualifying income. Above the pre-approval is a fully underwritten pre-approval. So that's when all that documentation is gathered. I do my review, and then I actually pass all that along to my team, and then they review things, scrub things, ask for additional things, and that file is actually submitted into a real underwriter. Underwriters are the ones that actually make the qualifying / approval decision on your file. They are the experts, and the buck stops with them. Me as a loan officer, I do a ton of due diligence and studying to make sure I know just as much about the guidelines as the underwriter does, and we often do. Really good lenders often do. But once you get the file reviewed by an underwriter, they can issue you what's called a loan commitment letter. So my review in the pre-approval, in reviewing your application and your documentation, I will issue a pre-approval letter, and it says, borrower, hey, you're good to go up to X amount of purchase price. Max loan is this. Here's where interest rates are today. This is what your payment, all your closing costs looks like. A pre-underwrite or a fully underwritten pre-approval, that underwriter says, congratulations, you have an actual loan approval. And so this can actually really help when you're submitting offers. A pre-qualification, the verbal stuff, it's basically worthless. A pre-approval is really what you need to be doing. And if you really want to be proactive and you want to take the extra week to do the pre-underwrite, pre-approval probably takes a day. Sometimes it's a matter of an hour or two, depending on how simple the file is for me. But if you really want your offer to stand out to sellers in this day and age, having the fully underwritten pre-approval can really ease the concerns of the sell side. And is this buyer's offer really going to go through? How strong is it? How strong is the pre-approval? So those are all free of charge. No lender is going to charge you to do that. And it's really just up to you, the amount of time that you have. But the pre-approval, absolutely necessary. Minimum standard you need to meet as a buyer nowadays. And it's really, again, application, upload docs.
So it sounds like that's a really important process. And depending on where you are in terms of your readiness to buy, it would depend whether you go with that fully underwritten or whether you're getting a pre-qualification.
Yeah.
I find that oftentimes people think that they're not supposed to really go to the lender until they found a home. And it really is the other way around. They want to see the lender before they start looking for homes. And even if someone's not ready to buy for a couple of years, it seems like it's a good idea for them to meet with the lender and get a game plan ready. What's your take on that, Christian?
I mean, gosh, I've helped people many years in advance doing the pre-approval. The pre-approval, the common misconception is that it really doesn't last very long. The reality is it lasts for 4 months, typically industry-wide, because that's the length of time that the credit report expires. So my clients, as long as I've had a soft credit pull done, I can rerun soft credit. That's not an issue. It's not going to ding your scores or anything like that. It's still going to give me the data that I need to see about credit and what your debts are and what your monthly payments are on that side, so I can factor into the debt ratios. But as long as nothing major about your financial situation has changed, I'm really just making sure I'm keeping updated with the client. And I have pre-approved people years in advance. As a matter of fact, last year, I helped someone get the Dream for All loan. I had pre-approved them 5 years prior to that and just done checkups with them every 6 months. So, oftentimes there are people that want that 6-month checkup because we've developed a game plan coming out of that initial meeting. Here's what you need to save every month to make sure that you meet your down payment goal in X amount of years, right? We can kind of reverse engineer that from somebody's budget. We can save $500 a month, or we can save 800, or we can save 1,000, 2,000. And we want to be able to buy by this date. What does that get to, at that time? What do we need? How, if we want to buy in the coming years and we don't necessarily have 20% down saved up, but we want to meet the minimum down payment requirements of 3.5% or 5%, and we don't have any money in the bank, how do we get there? That's part of the process. I think a lot of people think of mortgage lenders as just kind of like this quick transactional thing. I'm more of like a debt advisor, like a financial advisor, but just for your debt. And I do long-term service with clients, and I do long-term service after too. Like I want you to be my client for life. So we're checking in periodically after buying too. And I have all sorts of tools after the buying process to help that buyer in the future. And we have bots that are scanning the market every day for particular clients, so that I get notified when a refinance opportunity becomes available. But so there's lots of benefits to meeting early, and it's no problem at all. Really, truly, no skin off my back to meet with somebody years in advance and get them going. It just, to me, I'm like, okay, well, that person's just really proactive, and I appreciate that, because all day I'm dealing with numbers and paperwork, and there's nothing worse for a lender than getting a call when, like this happened this weekend. I was at my son's friend's birthday party on Saturday, and an agent was like, hey, I got this client who wants to submit an offer right now on this condo, and they haven't been pre-approved yet. Can you pre-approve them when you get back home? And I'm like, okay, great. Yeah, sure, I can do it. But it's like, gosh, if you could have just done that a little bit earlier, you wouldn't be stressing and usually late to submitting the offer in. People who are ready are getting their offers in early, right away, and they have a far greater chance of getting their offer accepted. Anyways, that was a long answer to that, but yeah.
Well, you bring up credit, and I think that's such an important part of it. I mean, often I hear people saying, I'm trying to get my credit in great shape before I go see a lender, or I need to get this credit card paid off. And I always recommend that someone not make a lot of changes to what they think is going to improve their credit until they've seen a lender, because the
Correct.
lender can guide them in that that way to really help them improve their score.
People
Do you
could
find
actually
that's the
shoot
case?
themselves in the foot. Yeah. There's lots of nuance to credit. Generally speaking, the credit bureaus like credit. They want to see you using credit. I've definitely seen where people have paid things off preemptively and it hurt their credit. I know, right? You're like, what is this crazy world we live in? But no. And then I will also say, when it comes to credit score, there's tons of loan options available, and your credit scores do not have to be perfect. I've helped lots of people buy homes with credit scores in the 600s. I mean, you can go down to 580 at a minimum. 620 and above is ideal for FHA. If you're over 700, 720, 740, you're going to see slightly improving interest rates there. Ideally, you want to be 740 and above. But again, you do not have to be 740 to buy. Okay. And one of the tools that we have, which many other lenders should and would have, are what if simulators. So Experian, Equifax, and TransUnion will allow you, after running a soft credit pull, which again doesn't ding your credit, so you don't have to worry about that. And I can talk about how hard credit pulls later on if you want to, but the software will tell us, hey, here's all the debts. We've identified that someone has a less than ideal score. Here are actually the things that you can do. It's powered by a lot of software and artificial intelligence. Here are the things that you could pay off, or the things that you could do to see the biggest point jump increase in the next 30 to 45 days, because that's the cycle that these credit bureaus run off of in terms of updating their credit score data. So, meeting with a lender, maybe doing some of those what if scenario simulators, or just generally looking at credit and seeing what the report messages say, and making those changes needed, you can sometimes have a decent jump. If there's nothing really you can do because it's some major credit events that happened in the past, there's lots of loan programs that do not ding your interest rate on your new mortgage due to credit issues. That would be FHA. Ideally though, you want to be over 700 if you can. But the difference between somebody having a 715 and a 727 or a 735, it's really going to be marginal. Honestly, as we're looking ahead with interest rates coming down in the next 2 years, you're going to be refinancing to something, very likely that's much lower. So fussing about these little details now, it's not beneficial to you in the long run.
Right. Thank you. So helpful. Okay, so now you've gotten your pre-approval. You know what your loan amount is, what the what your monthly payment would be. Simi, how do you go about selecting a real estate agent? What do you look for?
Great question. So buyers tend to ask friends and families first. Who do you know? Who have you worked with? So that's a great resource. Secondly, you can certainly go to the Coastal Housing website. You'll see which realtors are participating members. You can also look up the ABR designation, the Accredited Buyer Representative designation, meaning that realtor's gone a step above maybe other realtors. They're putting in their time, they're continuing their education, they're paying for the upkeep of that designation, and then they are imparting that knowledge to their buyer base. So that is a differentiator between the realtors out there from which you can select. And then lastly, maybe you go to the open houses and you will see firsthand how a realtor is conducting themselves. You can just say, oh, I'm in the market, I'm thinking about it, see how they follow up with you. Do they stay engaged? Are they engaging during the open house? Or do they just walk you in and say, let me know if you have any questions? I mean, there's a very real difference in how a realtor conducts themselves. And everybody's got a reputation that precedes them. It's a small community. You will start asking about realtors and you will get input very, very quickly.
Okay, great. So obviously it's a great idea. As Christian mentioned, you work with a local lender, not an e-lender. I imagine it's the same information on the real estate agent. Don't try to use your relative who lives back east to help you find a home in Ventura.
Correct. They must know the area that they are serving. It doesn't do that buyer any justice. And it's very much a liability on both the part of the realtor and the buyer. There are different rules and regulations and requirements in each community, so LA is very, very different than Santa Barbara proper, etc. And it's just important that that realtor be knowledgeable about the community.
Well, so many people think of the real estate agent just finding them the home. They're driving them around, they find them a home. And so sometimes people think, well, I'm probably going to find my home online. There's a lot of information. Do I need an agent? I always recommend that someone use an agent. The seller is going to be represented by an agent. The buyer should be represented by an agent. So I never recommend someone try to go on their own. Give us a little bit more information about why that makes sense, Simi. What's the role of the agent in addition to just finding a home that someone might want to buy and make an offer on?
Yes. The role of the realtor cannot be underscored enough. It is that individual who is overseeing the process from point A to point B. And that may, again, take weeks, months, years. It involves again, perhaps recommending a lender, and then identifying properties which fit the requirement of the buyer. Buyer may get a pre-approval letter from their lender that says, I'm pre-approved up to fill in the blank, $1 million, $1.2 million, whatever that number is. And then the realtor has that information and says, great, you are pre-approved up to, we'll use 1.2 as an example. And the buyer may say, but I don't want to spend that kind of money. So can you show me something? And I'll share this real life example where I had a buyer who said, okay, yeah, we have our pre-approval letter, we're ready to go. But we really want to see what's available in the $700,000 range for a single family home. And this was a few years back in Goleta. Happy to show the client what they're asking for. The realtor has to listen to what the buyer wants and or needs. And we looked at a few, and of course the buyers poo-pooed those right away, and they elevated their price point. And they said, how about 800,000? We looked at 800. Back in the day, even there was maybe just one or two options. And they said, oh no, this will not do. And we went to 9, and then we went to $1 million. And they couldn't find what they wanted. So the realtor, in this case was me, but it should be any other realtor, is constantly keeping their thumb on the market. They should know what's available, maybe what was withdrawn from the market. And in this case, I recalled seeing a lovely property. It was in the Kellogg School District, which this couple wanted. They didn't have children at the time. And I called an agent and I said, whatever happened to that listing that I saw? Well, it was pulled. Seller had to change their heart. I forget what the situation was, but I said, any chance you could resurrect it? And they did. And I was able to show those buyers this property. It was priced at 1.150, and it was beautifully remodeled on the interior. It was everything they wanted. And long story short, I was able to help them secure that property. So it's those realtors that are savvy, that really keep their thumb on what's happening, that can help those buyers, because it is starting to ramp up. And I always share that story about right after Super Bowl. It's been uncanny, 11 years in the running, where it bubbles up. Buyers and sellers just start to come out of the woodwork. And this year it started a bit early. So it is a good time to get your foot in the door, start working with those realtors, and appreciate the value that they bring to the table. They are the ones that will help not only locate the property, but there's so many more steps. And I'm going to give you another visual cue. Once an offer is written and accepted, this is what you would anticipate. Okay, I'm very paper oriented. So this is actually a file for a real transaction that I have closing this Thursday. This is how much paperwork is involved. It is so critical that your realtor understand legal documents. So starting with an offer's been written. What is the offer? Are they taking the time to explain all of this legalese and the requirements that you as a buyer are being held to? Then there are inspections. What happens during a home inspection? What happens with the natural hazard disclosure report? What happens if the property's in a high fire zone, high flood zone? Radon test. I'm just going to skim through. This one happens to be located within an HOA. What does that mean exactly? Here's a reserve study. You can just take a gander at how many pages have been flagged that took time for me to explain to buyers. And in this case, these are not first-time home buyers, but they're coming from the Midwest. Again, states, real estate, very different state to state. So it's incumbent upon the realtor to be patient, explain all of the nuances pertaining to this legally binding contract. It is the largest expense you will ever make in your life. So there are certain deliverables. What happens with a 17-day deliverable? What does that mean with me releasing those milestone contingencies? I need a due diligence. What happens with receiving seller disclosures? Somebody has to be that guardian angel sitting on your little shoulder, helping you navigate this process. And it's got to be someone that you're going to trust, that is confident in getting you over the finish line and making it as painless a process as possible.
Okay, so that was a great visual in terms of how much goes on after your offer's been accepted. So I think that's, really shows the importance of having an agent representing you. We have a couple other questions about first-time homebuyer programs and things, but I want to make sure we have time to get to the questions from our attendees. And if we have time, we'll go back to those questions that I have to ask for about first-time homebuyer programs. So Kim, what are you seeing in terms of the questions?
Yeah, we have some great questions here coming in. So I'll just go back to the start. So the first question was, what would a reasonable amount for a down payment fee be? Also, is there a specific amount of time that you have money in a savings account to show longevity of income?
Christian, I think that one's for you.
Yeah, so gosh, there's some first-time homebuyer programs that go 3% down with conventional conforming, so Fannie Mae, Freddie Mac. You could do 3.5% down with FHA. Rates get a little bit better, marginally better at 5% down. There are lots of programs that provide down payment assistance where you provide that minimum amount, the 3%, 3.5%, or 5%, and the second mortgage, either in the form of a lower interest or slightly higher interest program, comes in with 16.5%, 15% to get you to 20% down, so you don't have monthly mortgage insurance. Ideally, the minimum is 3%. So if you're looking at the purchase price, just plug it into a calculator, say, hey, 3%, could I do that? And then a safe number, I think, to use for closing costs is 10,000. So you would add 10,000 to that number, and you probably have the minimum amount. And then just it's a matter of qualifying on income. The lenders typically ask for 2 months of bank statements, and they're asking for 2 months, and this would be if you're in escrow or doing a pre-approval. They want to see the last 2 months of statements because they want to see what those balances are, but really they're also going through those transactions to make sure there's no large deposits that can be flagged as potential issue. What they're looking for is there a large deposit that was cash? Could it potentially be money laundering? Where is that money coming from? They want to make sure that it's coming from an acceptable source. So that's why they ask for 2 months of bank statements. Veterans, they get 0% down loans. Nobody else really does. The only exception to that would be the California Dream for All program, where Cal HFA, which I'm certified with, and I've done one of their loans before. They will gift the borrower it's not gift. They will give the borrower the 20% down at 0% interest. And it is a loan where they share in the appreciation of the property when you sell. And I can chat more offline with anybody who wants to learn about that. But the caveat with those programs is you've got to be a first-time home buyer, and you have to be a first-generation home buyer. So that means parents can have never owned a home before. You get a voucher and through a lottery. So in April, they're going to have a lottery and see who gets the vouchers for those, and whoever gets the vouchers are going to be the lucky few. It's probably tens of thousands of applicants, and there's probably only going to be a few hundred people that get it. But generally speaking, 3%, an extra 10K for the closing costs, and if you've got that in your bank, you're probably ready at a minimum.
Great, thanks, Christian.
And that's for the down payment fee.
That's for the down payment. Well, there's no fee. The down payment is your equity that you're putting up front into the property. So down payment and then closing costs, those are the fees. Those are the lender fee, title and escrow fee, appraisal, prepaid insurance, prepaid taxes through the end of the month, prorated interest through the end of the month. Most of those are fees. The down payment it's your money going into the property. It's your initial equity payment.
Okay, great.
Okay, perfect.
Next question.
Yeah, next question. Are there any advantages or disadvantages to home buying when an individual still has other ongoing loan payments? With the assumption that all current loan payments are on time and being paid towards both the monthlies and principals, car and or college loans.
So auto loans, student loans, they're just going to diminish your buying power. You may still be able to buy just fine. Most people that I help have car payments and student loan payments and are still qualifying to buy here in Santa Barbara. The way that qualifying works is through a ratio called the debt to income ratio. And for conforming loans, you can go up to like 49.9%. Jumbo, you can go up to 49.9%, but most like to be under 45. Some will cap it at 43%. And what that is you take your gross monthly income and you add up all your debts. So the new mortgage payment, the principal, the interest, the taxes, the insurance, any HOA dues, and then your credit card payments, your auto loan payments, your student loan payments. You divide all of those debts, if you add them up, into your gross income, and they want that debt to income ratio to be 50% or less, 49.9% or less. So, yeah, if you've got a ton of debt, it's probably gonna, lower your maximum buying power. But paying off that debt right away is not necessarily the best move. That's why it's important to meet with a lender, because they're going to walk you through, actually, this has more impact on your buying power. Either doing a number of other things. But no, it's not prohibitive, but it could be suppressive.
I think, Christian, that's the main point there, is that don't pay off a bunch of credit cards or loans until you've talked to the lender to see where the value is there. So great, thank you for that.
Yeah.
Okay, Kim.
Yeah, so this was a question about the California Dream for All. They're asking if they have to do that application on their own, or do they work with the loan officer?
You want to work with the loan officer, because part of that application is that a lender has reviewed your information and issued a pre-approval. So you'll work with the lender. The lender will have you complete an actual mortgage application, and that's part of the submittal package to Cal HFA. Cal HFA is not doing the pre-approval. The lender's doing the pre-approval, and then Cal HFA is also doing some checking in with them. They have some documentation that they submit to the Cal HFA directly, but it's a combination of the lender and the borrower working together to get that stack of paperwork completed and submitted into Cal HFA, and then waiting.
All right, great, thank you.
I think we answered this, but what is the debt to income ratio to work towards?
I think Christian just answered that.
Yeah, so that would be the
49%. 49% is the maximum. You can do any conforming loans up to that. For Santa Barbara, that's a loan amount up to $838,000 and change. If you're getting a loan that's over that, then you could still have that DTI ratio, but the pricing is a little bit better. The interest rate's a little bit better if you could do under 45 or under 43%.
Okay. All right. I think we're almost out of time. So, Kim, what other questions do we have?
Yeah, what types of assistance is there for first-time home buyers? Do I need to be 1 year with my employer? Is the pre-approval calculated on my last 2 years of income?
If you are salaried, I can qualify you right away. Typically, they want people to have 2 years of work history. If you're coming right out of school and you've got your first job, that can be approved on an exception basis. You really want 12 months of work history in general. But the 2 years is for variable pay. So hourly pay, part-time work, bonus income, commission income, that's the stuff that really needs 2 years of history. But a lot of lenders have changed their guidelines to allow for just 12 months. So it's fine. It's a little bit nuanced and case by case. So that would be something that you would ask your lender directly, but you don't have to have 2 full years to be able to buy. You can buy with less than that.
Great, thank you.
And
Kim?
how does having no credit affect one's ability to purchase a home?
No credit significantly limits your loan options. There's not a lot of lenders out there that have no credit programs, and the ones that do, they charge an arm and a leg. So if you don't have any credit at all, I highly recommend going out, getting whatever credit card you can, putting your groceries on it, paying it off right away. If you can get 6 months of payments that are on time, your credit's going to improve. So you ideally want 2 or 3 different lines of credit. So student loans, auto loans, a credit card, each one of those would count. Multiple credit cards would count. Get out there, use credit, pay it off on time. That's how you build credit. You really need to have credit. Credit score and debts that come through are a really big part of most loan programs. There are some no credit programs or limited credit programs, but they're not the best for you. And then before we go, I just wanted to add the benefits of the coastal housing partnership participants. So lenders, we'll give, a small credit depending on the loan amount. For me, it's between $500 and $1,000 towards the closing costs. Agents will often give up to 20% of their commission to cover your closing costs. That's thousands of dollars. So that's thousands of dollars combined that you will not get if you do not work with a non-coastal housing partnership agent or lender. So make sure that when you do go by, that you take advantage of this. Is the whole point of the coastal housing partnership, is to save you money. So anyways.
Jim, could you put those, you may have already done that. Could you put the link to the network partners in the chat?
Yeah, I will for sure.
Are there other questions?
We actually have a number of questions. Should I keep going?
Well, we'll keep going. If you have to sign off, we are going to be sending you out the recording. So feel free, if you have to go to another meeting, please do, but when we'll send you the recording, we'll keep going and finish up on the questions that we have.
I have plenty of
Okay,
time
great.
to keep going, so don't worry.
Great. What is a good way to find a lender?
Say that again.
What is a good way to find a lender?
Yeah, friends and family is a good question to ask. Who have you worked with in the past? Who have you had great experiences with? If anybody has any recommendations, that's a really reliable source, people you know and trust. I would also make sure you go online and review people, make sure that they have a good reputation online. And then another good thing to do is, once you've connected with your agent, ask them too. Who have you worked with? That's really great. Who are your recommendations? Because most of the agents here in town have worked with the good lenders and have worked with some not so good lenders, and they're going to have a short list of, here's my top 3. Here are the people that I know, I trust their quality of work, I trust their ability to see the transaction through, to keep a cool head, and to overcome hurdles when they come up, and who's also highly reachable. You don't want a lender who just is at their desk from 8 to 5, Monday to Friday, and you can't get a hold of them on the evenings and the weekends, because that's when most people are off work themselves and are free to ask questions and talk through things. And properties come up over the weekend and you need to be ready to pull the trigger right away sometimes. So, those are the 3 kind of checkpoints I would say. And as long as you're getting a good sense from everybody, you're probably going to end up just fine. But there's top 5 lenders here in Santa Barbara. There are really highly reputable people that you'll find on the Zillow reviews and get strong recommendations from agents. So those are my recommendations.
We have on our website, coastalhousing.org, there's in our home buying education section, there's an article about how to select a lender and how to select an agent. So that might be additional resource for you.
I'll add that link to it too. Yeah. So the first generation home buyers program was the CA Dream for All. There are other programs, and we encourage you to meet with the lender, or
so
was that the main one?
Has My Home. They have a couple of others where they will gift you like 16.5% of the down payment. Sorry, I keep saying gift. They will give you 16.5% of the down payment at a 1% interest rate. So that's still pretty great too. To qualify for that, you have to be under the income limits. You have to be a first-time home buyer, take a first-time home buyer course, sit with a first-time home buyer counselor. It's all pretty easy stuff to do. You may have asset restrictions on, you can't have too much money and still get access to that program. The other first-time home buyer programs generally have income limits as well. They will say, hey, you have to be under this certain income amount for this county or for this zip code. You've got to take a first-time home buyer course. So, and the benefits there is they may have slightly better interest rates. They're going to have the same down payment requirements as others, but maybe you can get the second to get you to 20% at a lower interest rate than a traditional second mortgage. Or, you may find through the process that, hey, we make more money and we really have to make more money in this particular area to qualify for this price. So, man, we don't get access to the first-time homebuyer program, but gosh, the down payment requirements are the same, the interest rates are the same. What was really the benefit of the first-time homebuyer program in the first place? So it can vary. Those are kind of the main things that they look at on a case-by-case basis. Though, I'm finding that sometimes the first-time homebuyer program does work and is in the best interest of the client. Other times, gosh, the normal Fannie Mae 30-year fix looks great and it's just as good, and there's not any other additional work you have to do to get it. So
Okay, great. Thanks.
Great.
Next question, Kim.
Can you have someone on the loan that may retire in the next few years?
yes.
Yeah, great. Next question is, what if you have late payments on your credit report from 4 to 5 years ago that you can't get removed and have been working with a credit repair company, but have since been paying bills on time for the last 4 years? Will that affect your approval?
Typically, if it's that long ago, no, that you can't get them off your full credit report. It will stay on your history, unless it was an actual error done by the creditor. Really hard to get removed. But yeah, no, I see late payments from 7 years ago, 8 years ago, and by then it no longer affects the credit. Really, if it's within the last 12 to 24 months is where that late payment is suppressing credit a little bit, specifically the last 12 months.
And if your salary is less than 12 months, will you still be able to qualify?
You should be able to, yes. You should be able to,
Okay.
yes.
And what are the loans called again that you can provide the lowest down payment? And is this just for homes, and does it include mobile homes or tiny homes?
I can't speak to mobile homes because that's called chattel financing. It's a different type of financing. Mobile homes, they're a hot topic. I won't, go say either way. But no, you don't get mortgages on mobile homes, so I don't know about those. But Fannie Mae, Freddie Mac, they have Home Ready, Home Possible. They have first-time home buyer programs are also known as AMI, or under area median income limit programs. You don't really need to know all the names. A good lender is going to answer those questions for you when you complete the application and talk through things with them. There's a handful of other local programs, South Coast Workforce Homebuyer Program. There's FHA. There's a lot, and the lender is, if they're good in their experience, they're going to know all the details about all those and know which ones are best for you right away, and then talk about them with you in the follow-up consultation after you've completed your application and sent in your docs.
That's a good point,
Okay.
Christian, is that you don't have to know when you meet with the lender, hey, I'm looking for this particular loan. You just said, I know
Correct.
your situation. The lender's going to marry your situation with a good loan for you. And in terms of the mobile home loans, we work with 3 local lenders that do offer mobile home loans. It's Community West Bank, Montecito Bank and Trust, and PB and Associates. So if you are looking for a mobile home loan, that, as Christian mentioned, is a different type of loan, and you would go to one of those lenders.
And
Okay, Kim?
last question, can you assist with buying land and assisting with loans to build a house on that land?
Yes. Okay. So lot loans, they're out there, they exist, but they're really expensive. And that's something I found industry-wide, not just myself. There's very limited banks that offer them. They often want to see 35 to 40% down, and the interest rates are atrocious. They're like 9-10%, and they charge multiple points in fees on them. So a point is 1% of the loan amount. So 2% of a $600,000 loan would be $12,000 in additional fees on top of a really expensive interest rate, and sometimes even a shorter term. It might not even be 30 years, it might be like 20 years. So the payment can be high. However, there sometimes are quirks. You can do seller financing for the lot sometimes. That sometimes will work. But when it comes to renovation and construction loans, yes, we have an entire renovation and construction loan team. There's lots of renovation loans, the FHA 203K. There's conforming renovations, there's jumbo renovations, there's jumbo construction. I've had clients buy plots of land and build their house from scratch. Typically is a very involved process. You have to have a licensed contractor, the approved plans in and approved, and essentially the lender issues the funds that are being used for the renovations or the constructions little by little as it's completed. They will pay back invoices, and you pay interest only on the amount loaned out through the duration of the construction project. And then when it's done, it'll convert into a standard 30-year fixed. You typically want to refinance at that point in time. That's the drinking from a fire hose version of construction and renovation loans and lot loans.
Great. Thank you. Well, these questions have been great, and it's clear that most of the attendees on the the webinar today are in that readiness position, are ready to buy. So you see Simi and Christian's contact information. You're welcome to follow up with them with any questions that you have as you go through the process, or contact Kim or me at the Coastal Housing Partnership office. And I want to thank you, Simi, and you, Christian, for being here today and providing such great information and sharing your knowledge with all of our audience today. It's been so helpful, and we will send out the recording to everyone. So thank you so much.
You're welcome.
Thanks, everyone.
See you.